Okay, welcome back everyone. Today's video I'm going to be reviewing last week's trading. I'm recording this on Wednesday the 26th of March, so it is a bit late. However, I'm going to try and record these on the weekend, so next week's one of the trades I took this week should be out a lot sooner, as obviously it's old news now. However, I want the focus of this week, as if you're trading, you probably would have seen, especially on social media or if you watch any other YouTubers or in any Discords, FOMC was last week. So for those of you who don't know what FOMC is, it's essentially where the Fed or the Federal Reserve in America, they have a meeting and a press conference where they talk about the economy, inflation, stuff like that. And that has a massive gauge on the next quarter in the market, so to speak. So it was on Wednesday, and many people treat the whole week very differently, or especially the day before. This one's on Wednesday, so some people might not even trade Monday, Tuesday or Wednesday and then will trade after. But what you can notice in these weeks is irregular volatility. There could be no volatility, there can be a lot of manipulation, a lot of consolidation, not ideal market conditions a lot of the time. So I'm on Forex Factory right now, as you can see, we're not on the charts. And if you click on the detail, it does explain why traders care in probably more detail than me. I'm not too much into the fundamentals of trading, I just look at the charts. However, when it is the big three being CPI, FOMC and non-farm payroll or NFP, they definitely do affect the market. And you can 100% see that on the charts through the two trades I'm about to show you. They both were affected, whether by my decisions or the market conditions were definitely affected by FOMC. So I'll jump into the charts and I'll show you the first trade I took. So here's the first trade I took this week. It was on Tuesday the 18th, so one day before FOMC. And as you can see, this trade is quite long. Yeah, but as you can see, it did affect this trade with this big consolidation. So I'll jump up to the high time frames and I'll walk through the trade real quick. So on the daily, you can see we're making lower lows, lower highs, prices moving lower. We made this low right here. We pulled back up into this daily fair value gap, which we respected twice nicely here. We did come up into it, but again closed around the consequent encroachment and then had a big displacement candle lower on Monday. So coming into Tuesday, I was definitely thinking, okay, we could be really nicely set up to take some positions down to kind of here or just to continue lower. So if we drop down to the 4 hour, again, if you've watched my fair value gap video, you'll be seeing this and thinking, we're displacing away from here, there's volume to the downside. We can definitely look for positions here, leaving fair value gaps moving away. The 1 hour, we had this grab, price came up into it twice, a big rejection candle here, another one here, and two really big ones. So I was thinking, okay, if we get a shift, I'll enter in and ride price lower. If we drop down to the 1 minute chart right here, you can see we had this shift. I entered off the close right here and then rode price down. Even though we did consolidate for a long time, again, very little drawdown, probably 5-10 minutes, if that, above my entry, and then we went down. Another thing, obviously consolidation can go either way, but if you look at, so we created this high here, price was never going anywhere near it, and we was testing the lows a lot more. So when we closed here, I thought, obviously it's near TP anyway, but I thought, okay, it's very unlikely we now go up. So there's always those extra confidences. Obviously you take the trade and the probability should be on your side. However, them little things what you can kind of look for can also help. And don't get too stuck up with consolidation and thinking, oh, your trade's going to reverse or whatever, because you took the trade for a reason, unless it's at a key level, which you should have had marked out as a point of sabotage anyway. There's not much you can do. Okay, so now I'm on DXY. As you can see, we're moving lower. Price took this low here. We came back up into this inversion fair value gap. We came into it twice, respected it beautifully both those times. You can see big rejection candles closing nowhere near it. This is a very nice sign for me that price is likely going to go lower and sweep this low. One thing with DXY I'll quickly go over. I'm going to have a video about DXY and I'll explain this in more detail then, but before we reverse, as we did here for example, we make a high, price moves lower, we then have engineered liquidity here, which we sweep before making the real move lower. So I'm thinking we may pull back eventually. It would just be healthy for price to do that, potentially up here or wherever. That's not relevant right now, but we made this low, price pulled back, and then the chances are we were going to sweep this. Obviously we have, but we didn't at the time, so that was off my idea. If I come into the 4 hour, we had this 4 hour value gap price come into, moving lower from there. So all of that together made me think, okay, bearish dollar, so bearish USD CHF. I took the short down. Great trade. Okay, so here's the second and final trade I took this week. This one I took on the day of FOMC. So if you are trading the day of any news event, any high impact news in general that involves your currency, I would always close 10 minutes before. However, with something like FOMC, if you want to close even an hour before, there's no real issues with that. Obviously, price did move up quite a bit before. However, we normally do consolidate like we did here for literally after this little kind of Frankfurt open even, price didn't do much. So you may be looking at this and thinking this trade lost. However, I closed down here in almost the lowest I could have, or in a very good place, securing a little bit over, I think it was 1.3, 1.4R. So I'll explain to you why I did that and how this is personally my favorite way to manage trades in these sort of uncertain situations. I'll explain why I took this trade, then I'll go over to DXY and explain why I closed it. Okay, so if we start on the daily, as you can see, we're moving up a lot. We're not really in any great PD area here. We haven't swept this high. There's no fair value gap, real order block here, anything like that. However, we do have a lot of fair value gaps. There's a lot of space to go over this low, for example, or this low. They're higher, longer term targets, but just something to keep in the back of your head. If we come to the 4 hour here, you can see we swept this high, closed below it, fair value gaps, displacement lower. I looked at that and thought, okay, this could be, we're coming from, obviously this would be the ideal place to sell, but we're coming from a really good place to sell. We could potentially ride down to here, or the fill of this fair value gap down here, potentially even these lows. Obviously FOMC day, it's likely that was going to happen on the day, but this low definitely could have been a good target. So if we drop down to the 1 hour, you can see we did come into this fair value gap down here. Obviously this was after I entered, but my stop did allow for that to happen. Again, maybe your stop might have been above this high before, but as it is FOMC, you want to be a bit safer with your stops. Add a little bit more, maybe pick the next high up. I also did that in the other trade. I didn't mention that, but you can go back and see. I put it in the high just above. As if I'm going to get stopped out, I want it to be wrong and not just a grab, because these random kind of impulses of volume do that to sweep lick out, kind of clear the board before the news comes out. So we had this fair value gap down here, up here even, shows displacement. Obviously it is quite old, it is of a completely different leg, but we didn't close above it and we moved lower from it. No fair value gaps here, but big candles, they do show displacement. So from there, again, 5 minutes still also trending downwards. I'll come back here just so I can quickly show you where I entered. We was making multiple breakup structures lower. I entered off this one right here. We did take some drawdown at the beginning, with price moved up, and then as you can see we dumped straight down and I ended up getting out right here. So now is why I took this and why I got out here. So if we jump over to DXY, I'll quickly show you my analysis. As I explained before, take this high, then move higher. It's the same analysis from the other trade. Obviously they're a day apart, but this time I'm taking the move up. We swept this high, respected it really nicely. Had this gap, fair value gap here as well. Had this nude opening gap, which you'll see clearer here on the 1 hour. We disrespected these bearish fair value gaps, filled this gap, displaced higher, fair value gaps being left all through after we took this. There is clearly, very, very clear displacement and sponsorship in the market to go to the upside. So we had this high up here. This high was the highest point before we tapped this low in the last leg. It closed below this low and it's also in line with this consolidation zone here. Price likes to come back to these zones, potentially reject. They are points of sabotage, and this is quite an obvious swing high. It's higher than the highs around it, and this one and this one. It's an intermediate term high. It's a strong high, right? So, as I've said on the other chart of GU, there was that low which I thought we could took. That ideally would have been in line with this, and I would have took the whole 2R. However, we had this low hanging fruit on DXY. I said to myself, before I entered, that high is my real take profit. So although I had a take profit set on GU, I wanted to get out. If it wasn't hit, I wanted to get off the trade as DXY came up and hit that. So I closed right here, which, as you saw, was pretty much the perfect exit, because we would have consolidated. I would have got a bit more, but I would have been stuck in the trade for hours, and it did eventually lose. Obviously, you wouldn't have held for the news, but it was very clean. The trade was like 10-15 minutes straight down to TP. So this is another way I manage trades. I do this. I don't just do this in heavy news weeks. However, it's a great way to kind of limit your time in the markets and also increase your probabilities of not leaving money on the table. You don't want it to go up near your TP in reverse because there's so much uncertainty. There was just a random wick that took you out. This was, I thought, a high probability zone for price to come into and potentially reject. As you can see, we actually did at first move lower, so it was a great place to get out. Price did end up moving higher, but who really cares? I took profit. I took 2 really good high probability trades through FOMC, and I hope there was stuff you could learn from them of how I manage and how I tackle this week, because it's definitely more difficult than normal. So that's all for this video. I hope there was some value you could take from it. I hope you enjoyed. I'm going to have more reviews coming out. They're going to be coming out sooner. Also, pretty much every trade I take on my TikTok, or most of them, pretty much most of the trades I take, I also reveal my TikTok of the day of taking them, so you can go over there and kind of get a quick overview before I go more in depth on here. I've got more educational videos coming out. I'm going to have psychological videos. I've got so much planned for this YouTube channel. We're right at the beginning of this journey. I'm super excited. I'm really enjoying it. And I hope you guys are too. If you've got any questions, leave them in the comments. Maybe I can even make a video on that. You can give me some ideas, or if it's something small, I can just answer it there. Make sure to like, subscribe, go over to my TikTok, follow there, and just stay tuned, because we're cooking. We've got a lot coming up.